Let me ask you a question. If you had 50K sitting in your savings account earning 4% interest, would you leave it there or would you put it to work in something that gives you monthly income, tax advantages, and builds equity over time? That's the conversation I want to have with you today, because right here in Pittsburgh, there are everyday people, teachers, engineers, nurses, who are quietly building real generational wealth through real estate. And most people don't even realize how accessible it is. My name is Prashanth Nandyala. I'm a Pittsburgh real estate agent, and more importantly, we are active real estate investors in the same neighborhoods we sell in. We don't just talk about this stuff, we live it. And in this video, I'm going to break down exactly why real estate is still one of the most powerful investments you can make, especially in the markets like Pittsburgh. Before we get into it, if you're already thinking about investing in Pittsburgh real estate and you want someone to run the actual numbers on a property with you, my team does that for free. No pressure, no pitch, just real data. There is a link in the description to set up a quick call. Okay, let's get into it. Let's start at the very beginning. Why invest in anything? Here is a simple truth. Inflation is a silent theft. Every year you leave money sitting in a checking account, it loses the purchasing power. $1 today buys less than $1 5 years ago, and that gap keeps widening. So you have two choices. Let your money sit still and slowly lose value, or put it into an asset that grows. And when I look at all the options, stocks, bonds, crypto, index funds, real estate is the one that consistently delivers wealth for regular people who aren't full-time traders. Now I know what some of you are thinking. Prashanth, what about the index funds? What about S&P 500? And look, I'm not here to trash stocks, but I want to show you what real estate does that stocks simply cannot. Real estate builds wealth in 5 distinct ways simultaneously. And this is the part most people never fully understand. Let's go through them one by one. Pillar 1. Cash flow. When you buy a rental property and your rent exceeds your mortgage, taxes, insurance, and expenses, what's left over is your cash flow. That is real passive monthly income deposited right into your account, whether you're at work, on vacation, or a slave. In Pittsburgh, we regularly see investors cash flowing $300 to $700 per month, and significantly more on a multifamily properties. That's money working for you, not the other way around. Pillar 2, appreciation. Over time, real estate values go up. Pittsburgh home values have appreciated over 4 to 5% per year over the last 2 decades. That's not explosive, but it's consistent and it's compounding. And unlike stocks, this is a tangible asset you can see and touch. Here is what makes Pittsburgh unique. We didn't see a crash in 2008. Most major markets lost 20, 30, 40% of their value. Pittsburgh barely dipped. That stability is rare. And it's exactly why investors from DC, New York, and California are quietly buying properties here right now. Pillar 3, equity buildup, or what I call a stealth wealth. Every single month that your tenant pays the rent, a portion of your mortgage principal gets paid down. Your tenant is literally building your net worth for you. After 10 years of that, you might have 80K or 100K more in equity you didn't have to actively save. Pillar 4, tax advantages. And this one is a game changer. As a real estate investor, you can deduct your mortgage interest, property taxes, insurance, repairs, property management, and even depreciation. Depreciation alone can legally shield thousands of dollars of rental income from taxes every year. I always tell people, consult your CPA. But know that your real estate is one of the most tax efficient assets available to regular investors. Pillar 5, leverage. My personal favorite. This is the superpower that real estate has over almost every other investment. When you buy a $250K property with a down payment of $50K, you control a $250K asset. If that property appreciates 5%, you made $12,500 on a $50K investment. That's a 25% return. Try getting that from savings account. Stocks don't let you do that without margin, which is risky. Real estate lets you amplify your returns using banks' money secured by a real asset. That's why so many wealthy people build their fortunes through real estate. It's not luck, it's math. Okay, so real estate is powerful. But why Pittsburgh? Why not Charlotte, Nashville, or Austin? Let me give you 3 data-backed reasons why we choose invest right here. Reason 1. Affordability with yield. The median home price in Pittsburgh is around $242K, a fraction of what you would pay in coastal markets. But cap rates here run between 5.5 to 8.5%. In New York and San Francisco, you're looking at 3 to 4%. Pittsburgh lets you actually cash flow from day one. Reason 2. Economic anchors. Pittsburgh's economy is not dependent on one industry anymore. We have UPMC, one of the largest hospital systems in the country. Carnegie Mellon, University of Pittsburgh, generating 60K plus students and constant rental demand. And a growing tech sector, it's been nicknamed the second Silicon Valley. These aren't trends. They're structural demand drivers that keep rents rising and vacancies low. Reason 3. Pittsburgh didn't crash in 2008. It's one of the few major American cities that held its value during the financial crisis. That track record of stability is exactly what a long-term investors look for. We are not boom and bust market. We are a slow and a steady wealth building market, and that's a feature, not a bug. Here is something I want to be real with you about. Me and my wife didn't start out knowing all this. We had the same fears. What if we pick a wrong property? What if the tenant doesn't pay? What if the market shifts? Those fears are real and valid, but we did the work. We ran the numbers. We used our own analysis framework on every property before we bought. And what we found was that in Pittsburgh, at the right price point, in the right neighborhood, the math works. And it works consistently. That's the reason why I call us investors practitioners. We are not just agents giving you generic advice. We own properties in Pittsburgh. We understand the cap rates. We've been through inspections, tenant placements, lease renewals. When I help a client evaluate an investment property, I'm using the same process I use for myself. And that makes a real difference. So is real estate really worth it? If you want cash flow appreciation, tax advantages, equity buildup, and a power of leverage, all in one stable and affordable markets in the country, then yes, Pittsburgh real estate is absolutely worth it. And it may be the best wealth building decision you ever make. If you're ready to take the next step, whether that's your first investment property or your fifth, my team and I are here to run free analysis calls. No pitch, no pressure, just real numbers on real properties. The link is in the description. Book a time, let's talk. And if you found this video helpful, please hit that like button, subscribe, and drop a comment below. What's your biggest question about real estate investing in Pittsburgh? I read every single one. I'll see you in the next video. Cheers.